Hello, everyone. This is Adam Meister, the BitcoinMeister, the Disrupt Meister. Welcome to the This Week in Bitcoin show. Today is May the 29th, 2020. Strong hand, long-term thinking. Bitcoin is next Bitcoin. Unconfiscatable. Golden age. One Bitcoin equals one Bitcoin. Okay, I'm offended by selling. Dudes, we got an all-star cast here today. Boris is coming in from the Netherlands. BTC Benny is in beautiful, lovely Calgary, Alberta, Canada. All right, so let's jump into this right now because there's been a lot of there's been gossip news. There's been legitimate news. Let's start with BTC Benny. Goldman Sachs said that Bitcoin wasn't a real asset class. Now, I just want to preface this by just saying it's newsworthy, okay? But Bitcoin really doesn't care what Goldman Sachs thinks of it, obviously. And I think we all could have predicted what they're going to try to downplay it for as long as possible. So for me, it wasn't that shocking, and I don't want to put them on a pedestal. Bitcoin doesn't need Goldman Sachs' approval, but take it away, Ben.
Yeah, I mean, I looked at the leak of like the deck that they were using, and I mean, it just reads like 2014 FUD. Like, did somebody like researched a bunch of stuff and used links from 2014, 2015, and just used that whole playbook and ignored everything since that point in time? Like there's a slide there where they compare Bitcoin to the tulip mania. Like how many times are we going to hear that? Like the tulip mania was contained within a single year and Bitcoin's been around for over a decade at this point. Like at what point do you stop having to use that narrative? I would have assumed immediately, but apparently not. And yeah, I don't know. I found the whole thing to be unimportant, but also I a little bit wonder if it's to the point where behind the scenes they're actually starting to dabble just a little bit. It gave me flashbacks to The Big Short, where they keep on they keep on saying like no, this is still rated well. The ratings agencies were all in on everything and everybody, but behind the scenes, they're actually buying up a bunch of, these credit default swaps until they get positioned to a point where they're okay to say, oh yeah, actually, this is actually legitimate. So like either way, at some point when there's that capitulation and there's an admission of, you know what, this is a legitimate asset, that is probably a good thing to hold, they will have already come to that conclusion far before they ever say that publicly. So I don't know how far along that line they are, but at some point, whatever they're saying will be lies as they're purposely in the background doing the opposite. So we'll see when that happens.
Okay, good. You very rational approach to all this. Didn't change your mind about Bitcoin. How about you, Boris? Your thoughts on Goldman downplaying Bitcoin?
Yeah, it's the most horrendous FUD, and I agree completely with Benny that this is straight out of 2014, 2015. It's really terrible. And what I find amazing, I don't really believe that there's some political agenda. I think they're just plain dumb. There's some people who put together these kind of reports and have to do it every year. And it's just someone who really doesn't understand anything about Bitcoin. And I mean, we've seen the examples, even JP Morgan has changed their minds. You know, I mean, even Jamie Dimon, I mean, he was the biggest Bitcoin hater in the world, and he apparently changed his mind. We've seen some reports from Deutsche Landesbank, which is a German bank. And they took most of the work from Plan B, and they used it to build a really solid investment case for Bitcoin. And I mean, this is the kind of work I expect from a bank. But I mean, this stuff is, I mean, it's quite pathetic, to be honest.
It was like an intern maybe did it, or they didn't want to. That's very interesting about the German bank. I hadn't heard about that. So they did some legitimate research.
Well, actually, in the beginning, they just plain copied the work of Plan B, and then Plan B sent them a message on Twitter, and actually they became quite close, I believe. But they rectified it and put his name with the research, and that's interesting because, as some people know, Plan B is also quite high up in the financial world, and the way that he quantifies Bitcoin's price or value is, I mean, it's really solid. It's really hard to pull the rug under this model. And yeah, actually, I'm surprised that there's not more banks that actually picking up on it openly and using that research in their papers.
You know, it's interesting you bring up Plan B. We just had the halving, all about supply and demand, and these last few days, we've heard that Grayscale, which is GBTC, Barry Silver, whatever you want to call it, is buying up more Bitcoin than's being produced. BTC, Benny, you heard about this, right?
I did. Crazy numbers, actually. I think it was what a third more than the block reward subsidy. Like that, it's some insane number. Either way, the amount of Bitcoin, newly minted Bitcoin coming onto the market is being gobbled up more than that by a single entity. And if you look at also, you can side by side and see comparisons with just Cash App retail investment people coming in and just buying Bitcoin. They were already taking a huge chunk of what would have been like the block subsidy. So like just between Cash App and GBTC buying up Bitcoin, already there's a definite pinch on supply. And I'm wondering if this time around we see things propel a little bit quicker, because there's the exact same supply pinch back in 2016. But we did see like a post-halving dump, and mostly because people bought the rumor and sold the news. Not as much this time. Like, in fact, we're kind of peaking back up a little, 94, 95, back into the 9,000s and everything. I'm wondering if the panic that happened in March contributed to some miners that had their treasuries kind of cleared out to keep on running during that time. I'm curious what impact that had, but regardless, there is a lot of demand for very, very little supply, and we're starting to see that now. And I've got to say, like, it's impressive that Bitcoin is doing how well it has, and even in the face of, again, like the financial fallout from everything that's going on in the world, just to start to recover, the Fed had to print trillions and pump it into equities markets. Bitcoin has more than recovered. In fact, like an additional 50% on top of where we were before the panic dump in March, with no intervention from any third party. Bitcoin completely recovered on its own. We didn't have to print a ton of money to achieve that. So all around, just kind of impressive, and it's beginning to speak to the scarcity of this digital asset. Again, like the most scarce asset on the planet now.
So what's going on right now with Barry Silver buying up all the Bitcoin and Cash App? Does it give you more confidence in the stock to flow? I don't know if I've ever asked you about your take on stock to flow, that model.
Yeah, I mean, I think, a lot of it, as far as the numbers go, are beyond my expertise. But from listening to experts that have actually gone and looked at the model and dissected it in comparison to other financial assets and in comparison to things like gold, it seems to hold up. And he's done some very interesting work on a time series model, which was the original stock to flow, and added some updates to that to get more accuracy. And then he's got the phase shift version, which is a cross asset model, which maps Bitcoin and like its epochs of narratives, and then put silver and gold on that line as well. And it seems to, it makes a really nice, perfect straight line with these clusters of price points. And so I think there's something there. Now, I mean, models aren't meant to hold forever. Eventually they all break, but you can potentially, for a certain window of time, get an idea of projecting out. And he's said multiple times, this is not meant to be like a specific kind of dollar. It's more like an order of magnitude. You get to kind of project out what giant range we're going to be within in a certain epoch. So, you know, we'll know if it holds in the next couple of years here, and then it'll just be a matter of whether it holds for another halving after that.
All right, Boris, you were the one that brought up stock to flow, but what do you think about all this Bitcoin being purchased by just a couple entities?
Yeah, that's how it goes. I mean, I'm not surprised at all. Actually, what I'm find really interesting is what's happening to gold. And I'm not a gold bug. I don't own any gold. I mean, it's not for me, but I follow it. And I've noticed that, especially in the Netherlands, it's practically impossible to buy physical gold. All the stores, they're sold out. There is weeks and weeks of waiting lists. And even if you want to buy a little bit, it's not possible. And that's interesting. And that means that there's a lot of boomers who are trying to opt out, get out of the stock market, who still believe in gold, and they want to get their hands on some. And I'm just sitting there like, hello, I mean, is nobody noticing Bitcoin? Because if this is happening to gold and you can't buy any gold and you can't get out into an asset like gold, it might be time to just take a look at what Bitcoin can offer you. And actually, I think that's what's happening. And I'm quite skeptical about the ETFs and all these companies offering sort of like Bitcoin services or some paper Bitcoin product. I'm skeptical of that. But if I talk to investors and I talk to people who are actually into that scene, they're all really enthusiastic about it because they say, yeah, I can hold Bitcoin without the risk of actually owning Bitcoin. And, you know, they're afraid of storing maybe $1 million in Bitcoin and putting it on a hardware wallet under the sink. I mean, that's a horrible idea. I can imagine if you're 60 something and you have to do that, that's terrible. But the idea that they will use these products to actually get involved into the Bitcoin, it's fine. It's okay with me. I don't care as long as people start seeing it and learning about it. And listen, about the stock to flow thing. What's interesting, when I was on your show for the first time, we talked about this whole phase idea. And we talked about how Bitcoin has some economic properties, and once those economic properties are played out, it will gain political properties, and we'll see a completely different Bitcoin. So everything, and that's what I really love about Plan B's model. It's everything that's in there is something, is stuff that every Bitcoiner who's been in it for a couple of years actually feels in their DNA. You know, it's such beautiful stuff. I mean, the scarcity, the digital scarcity, the way it's adopted, the phases in which it's adopted. It's every Bitcoiner has seen this and feels it, and he just puts it on paper and puts a number on it. That's brilliant. That's really brilliant.
So did you have a good halving? Talking about phases, I mean, we entered a new phase here.
Yeah. No, we had an online party in the Netherlands, and we had like, I don't know, we had like 1,500 people watching our live party, and it was good. I mean, there's lots of Bitcoiners in the Netherlands.
It's good to be on the other side of the halving now, and getting ready for the 2024 one. You always got to be looking forward, but yeah, it will be interesting to see how all of this plays out now that, I mean, back in 2016, we didn't hear about, specific entities buying up huge chunks of the new Bitcoin being mined. And now we are. So this is different. This is different. So I'm very much looking forward to seeing how this turns out, if we're going to actually really notice this in the next few months. Because the price didn't zoom up last time until it was 7 months afterwards, 8 months, until it was the next year. So maybe it'll happen before 2021. I don't know. It's good to be alive to even see all this stuff. So I'm real happy about that. Okay, pound that like button, everyone. We're going to talk about the past real fast here. there's someone out there that pretends to be Satoshi Nakamoto, whoever this may be, and he's got court cases. He's a big legal dude. Okay, he likes to get into lawsuits and stuff. And people found out the addresses that were listed in that he claims are his. They were not previously revealed in the trust that he made up or whatever. And someone out there, once the addresses, the public addresses were revealed, someone out there signed the addresses. So these 11-year-old addresses. So one of my big takeaways from this is that, yeah, obviously they're not the fake guys' coins. Okay, someone else signed them. I mean, that you should have known that already. Okay, people. But somebody out there has been hanging on to Bitcoin for 11 years. And that dude isn't Satoshi Nakamoto either, the person who did this signing. So BTC Benny, what are your thoughts on this situation?
I mean, it speaks to the resolve of that person. 11, well, I mean, however, it was shortly thereafter, right? It was a few months.
Yeah, months, weeks. It was very soon after, yeah.
Yeah, so it was very, very early Bitcoin. And they're just sitting. Imagine that individual sitting on that kind of money this long, and having the keys, having access to them, and having the resolve to not touch them. Now, I mean, of course, this individual, if they have that much conviction around the value proposition of Bitcoin, they likely have Bitcoin elsewhere that they got later on down the line, and they've utilized those, and they're probably keeping some of those safe. But they clearly saw an opportunity where, you know, they're not worried about, they're not going to be moving those coins or anything, and they just wanted to, you know, stick it to a fraud. You know, they saw the opportunity and jumped at it. But again, very, very impressive. It speaks to the quality of people and the consistency that some of these hardcore Bitcoiners have in really recognizing and being unwavering in their support of this amazing new technology and the tearing down of the old world in order to construct a new one. I love it. I love that somebody just sitting around, yeah, I'm going to sign this message because I don't like this guy.
Yes, that was it. Quite interesting how this all played out. And you make a good point, though. If he was in that early, he probably also has some other Bitcoin at some other addresses that aren't associated with those ones that maybe he cashed out already. I mean, you got to think. I mean, you got that much Bitcoin. Get yourself a car or something like that. I mean, I'm offended by selling, okay, but this dude, I mean. Props to him. 11 years, that's amazing. So I would think that maybe he mined some afterwards, and maybe he did get rid of some already and bought a car for himself. Who knows? Who knows what it is? But good that he also just made it so obvious that somebody was a fraud. I mean, now no one can argue. But we're going to actually get into that in a second, the Electrum thing, Ben. We'll talk about that. But Boris, do you have any thoughts on that?
Yeah, what's really interesting is that there's some legal consequences to this message, and that's I don't know if you don't want to name his name on purpose, but I'll call him Faketoshi.
Call him Faketoshi.
Faketoshi.
Yeah.
He submitted these addresses to the court and claimed that he had ownership over the keys, and the fact, I mean, this message proves that he doesn't. That means that he committed perjury, and that means that we might actually see him go to jail for lying to the court. And of course, we all know that he never had access to these private keys. He might have the coins on the disk, but he doesn't have the private keys. So otherwise, he would have spent them years ago. But so this is really interesting. So I really loved how he started claiming that he sent them. First, he told everybody that he was hacked. That was not really a good argument, because why would you send a message and not just take the coins that are on the addresses? And then he said, "Yeah, I sent it myself." Like, he's going to send a message because he has to do that, because otherwise he's committed perjury. So he has to say, like, "Yeah, I sent this message to prove that I have ownership of these private keys." And that's insane. I mean, who would send a message like that about talking about himself that he's a fraud. That's crazy. So it's just such a beautiful, ridiculous situation. This can only happen in Bitcoin. You know, it's like a soap series.
And the other thing about it is, if he signed that message with those keys, that means he lied in saying that he doesn't have access to be able to move them, which means he's now on the hook for like the couple $1 billion that he would owe to the estate that is taking him to court in the first place.
Absolutely,
so he's trying to ride this line of, I am Satoshi, but I don't have this money, but it's mine. Like, it's incredible.
It's impossible. He has to either pay up like 50% of the 1.1 million Bitcoin, or go to jail for perjury. that's between a rock and a hard place. That's a tough situation.
It is great that in with Bitcoin you can prove ownership by doing what was done, and you can still remain anonymous too. I mean, nobody knows who this person is. So it does show some beautiful aspects of Bitcoin. Now, an ugly side of the space that it shows is that still, and I don't get this, still some people believe that Faketoshi is, it just shows the cult mentality some people have in their head. They have to follow a strong leader to the very end. Some people still believe it. And BTC Benny, you told me that someone over at Electrum, say what happened here.
Yeah, so I was looking on Twitter. Jameson Lopp tweeted out. He said, "Fun development this week for anyone who uses Electrum-compatible wallets. The lead maintainer of Electrum X server has snapped, and all future releases will be Bitcoin SV only." Now, to tag on to that, luckily, some of the Rockstar dev tweeted out, seems Electrum wallet devs are stepping up in to fork and do the right thing. So they're going to do a fork of Electrum X server so that people can continue using Bitcoin with Electrum and connecting any Electrum compatible wallets to it. And then in addition to that, there's now a plugin. What's it called? It's called... I'm not even sure the name. Anyways, it's a plugin for Electrum Wallet that allows, instead of running an Electrum X server, you can just integrate it with Bitcoin Core. So you can just connect it to your own node externally and not have to run an Electrum server. So already there's a fork and then another solution that allows you to not even have to run Electrum server. But again, yeah, what you're saying as far as this cult mentality around these figureheads, and it's funny because people always say Bitcoin is a cult, but it couldn't be further from a cult, because everybody is constantly at each other's throats and is thinking so adversarially that if I were to tweet anything tomorrow that seems like kind of not on the side of Bitcoin, everybody would be questioning like my facts. They'd be like checking into my actions previously, checking like my consistency of narratives. They'd be, actually check if it was tech related. They'd be checking like the code to verify what I said. Again, Bitcoiners are so in the realm of don't trust, verify, and push that narrative by trying to run their own nodes and self-verify the protocol and their UTXOs themselves. Whereas you get into a space like Bitcoin SV, and you've just got this person who's like their deity, and they're saying, "Oh, glorious leader, tell us what to do next. Explain the magical ways that you've played 4D chess with the rest of the world." Like, it's so ridiculous. Where the mentality of don't trust, verify got converted into trust this dude. Like, it's insane to me. I don't get it.
Yeah, good contrast right there you just made. Boris, do you have any thoughts on big egos and people worshiping big egos or anything?
Yeah, and maybe also big bags. I can imagine that stuff like this is driven by people holding large bags of altcoins, and I can imagine. I mean, I've seen people stray from the path and fall into the Bcash trap, and once you're in there, and maybe, I don't know, you're invested in it and there's no way back, and it gets worse, and you go from bad to worse, and you buy the dip and it ends up being the top, and and you end up like giving your project away to BSV for no apparent reason. It's really a sad story, and I think time will deal with these people, and yeah, there's just no way of running from the truth. And we see the collapse of the altcoins, and there won't be another alt season. Nobody believes in it. Even if it does exist, or even if it will come back in some form, it will be focused on retail, some retail people who still want to buy it, but not the institutional investors. They don't really they don't trust it at all. They will never put any money in something like BSV. It just won't happen. It's going to be Bitcoin, and yeah, the next battle will be with the central bank digital currencies.
Yeah, I will say this. What you just said about BSV and institutional investors, of course they would not, if they look at BSV as a company, you would not invest in a company with that dude as your CEO, of course. And that's the way institutional investors would look at something like that, obviously. But I do think some of them, they will want to diversify for the sake of diversification. And we'll see some altcoins pumped. I mean, definitely Ethereum is loved by certain people. So, but something like BSV, yeah, I don't see how anyone in their right mind would that controls a lot of money would want to be in that. And you bring up the bags, okay? And I actually didn't think about this. Yes, if you for some reason have bags of BSV, if you turned your precious Bitcoin into BSV, yeah, I can see how you would keep the lie alive, like this guy's Satoshi, even if you know it's not. I mean, because you're just trying to bail yourself out. I never thought about that side of it, because I don't like to think about BSV very much. But that's a sad yeah, that's a sad reality there that you brought up.
Those banks that decide to diversify, if they do that, are going to get wrecked. Like I did a what was it, in 2017, mid 2017, Brian Kelly got on CNBC and did a picture of a well-diversified crypto portfolio. And I broke it down, and I did a post-mortem on what happened and what happened to your money. I said, if you put in 10K with this allocation, where would you be at today? And in terms of dollars, you would have been up. Like, this was like at some point last year, but in terms of dollars, you would have been up. You would have been at like 13K. But then when we broke it down by asset, it was insane. You basically lost money on everything except Bitcoin. 2 coins, you were just kind of break even, maybe just slightly above, and all of your gains came from Bitcoin. In fact, the gains from Bitcoin made up for the extreme losses that you suffered in everything else. And I further broke it down and looked at the opportunity cost of not just holding Bitcoin. And literally by doing that well-diversified portfolio, you lost half of your Bitcoin in like a 2-year span. It was insane.
I remember this. You did an excellent job with that, because it boils down to my big saying: value your wealth in freaking Bitcoin. All the altcoin traders don't do that. There's some guys that are probably naive to this very day and say, "Oh, I did so well in dollars." They don't understand. If they would have held Bitcoin, it would have done a heck of a lot better. Well, I'm glad we've transitioned into altcoins here, because I'm going to pop a surprise question to you guys that I don't know if you guys are even aware of. We'll start with Boris. Tether, in terms of market cap, surpassed Ripple. Okay, it flipping Ripple. So Tether has the #3 market cap now in all of cryptocurrency. What does that say about the space? I mean, to me, it's just like we got a lot of degenerate gamblers here that are just addicted to Tether. But I'm no fan of Ripple or anything like that. But any thoughts on that, Boris?
No,
surprise
I agree with you.
question.
I think Tether is used mainly on exchanges for people who want to exit their positions for a short while into something that resembles US dollars, and then only to return back to Bitcoin later. Yeah, it's a lot of money. I've no idea where the liquidity comes from, but actually, there's a time when I doubted the Bitfinex story, and then I spent some time looking at it, and I don't really doubt it anymore. I mean, they were in 2007. There were so many people buying Bitcoin on Bitfinex, and they had to go through Tether. That's how Tether didn't pump Bitcoin. They didn't pump Bitcoin. It was just people buying Bitcoin using Tether, and yeah, I assume that the same thing is still happening.
Clearly, I mean, it's quite popular if they can keep on printing it or whatever they're doing, and it surpassed Ripple in terms of market cap. So, what's your take on that, BTC, Benny?
Well, it's interesting because I find that stablecoins don't really, if you're trying to look at market cap, which is already a terrible indicator, and like dominance, market dominance, it's just the most ridiculous indicator ever. But if you're looking at it from that perspective, I mean, enough money flows into Tether, it could easily flip Bitcoin as the number one coin, because when your measurement is dollars, there are an infinite number of dollars. And so you could easily pump $150 billion into Tether. Like that's a drop in the bucket compared to the trillions of dollars that have been printed out there. I'm not saying it's going to happen right away, but when you're measuring in dollars, you can always print more dollars, and thus your market cap of your dollar denominated stable coin, I almost used another word, would reflect that it is worth more dollars because more dollars are sitting in it. Absolutely. But I think the other interesting thing about this, as to play as devil's advocate for these stable coins, is so I was chatting with the guys at Ledden, who are based in Canada, but the co-founder Mauricio is from Venezuela, and so they're trying to provide stuff to a lot of people in Latin America, and they're trying to utilize some stable coins as a way for people to flow out of their local currency via Bitcoin and then get exposure to dollars, because it's almost like orange pilling people as they try to attain stable value through the dollar, which is like the most stable of the fiat currencies. And so they're getting, people in Argentina, for instance, are trying to get out of their local currency. And they now see, okay, well, I have to get this thing called Bitcoin, and then I have to convert it into USDC so that I can have a stable store of value in comparison to my local currency. And so in the process, they then get exposed to Bitcoin, and they probably start to, some of them at least, will start to go down that rabbit hole of, okay, well, what is this thing? Why am I going through this? And through comparison, I think over time, a lot of those people will eventually migrate to Bitcoin because they understand the reason they had to flee their own currency to the dollar is the same reason that people will eventually have to flee the dollar to Bitcoin, is because you're going towards the most scarce digital currency, digital money, digital anything out there. So, I mean, again, a stable coin is just counterparty risk piled upon counterparty risk already. Like already there's no stability and you have no control over the dollar. But then you just add in is there enough money in the coffers to back this one-to-one with the already terrible fiat that's backing it? So yeah, double-edged sword.
All right, pound that like button. All right, so we were talking about altcoins there, BTC Benny, and the big bad altcoin that's going to debut one of these days, Libra. They had a wallet called Libra, and they renamed it. What did they rename it anyway? I forgot. And that's the thing. I don't even remember.
I don't even know.
I forgot the name already. Did I write it down?
I can tell you. Oh, it's Novi.
Novi. No, yes, I did write it down. Novi. So, do you care about this? Was it just noise? Is it good marketing on their part?
It's kind of just noise. I mean, like it was a little confusing with the Libra versus Calibra. Like I guess I can kind of see why they changed it, but I don't know. Like, does anybody really care about Libra? Like, it was this big scary thing, and they called all these Senate hearings and everything, and it just beckoned to the fact that you can't haul Bitcoin into the Senate to question it. Like, the elephant in the room is how irrelevant Libra was. And like the fact that they were able to say, I don't know about that, you're not allowed to do that, is why Bitcoin exists. So I don't know, everything to do with Libra has just been like, is it even going to launch? Is it ever going to?
Well, that's the question. Is it ever going to launch? Well, this is a step toward launching. They want to rename it if they didn't think they were going to. They're trying to ease confusion. They don't want people to be confused between Libra and the wallet. Maybe they're trying to trick some of the senators, saying, well, you hated Libra, now it's called something else, so it's good. I mean, simple minds could be convinced of certain things. But I think it's a positive that they're still alive. Now, do I like altcoins? No. I think it's going to get people into Bitcoin. And I think it's a reminder they're still out there. What he wants, Zuckerberg, there was another article about how this is going to make it easier for people on Facebook to buy Facebook products or something like that. I mean, they're going to have their own little closed ecosystem, perhaps. To each his own. I think I think corporations should be able to make their own private cryptocurrencies, and so the world can see that no, this is definitely not Bitcoin, and that they can be hauled into the Senate, but still I think they should be allowed to. So I don't know, Boris, do you have any Libra thoughts?
Not really. I mean, I went to Disneyland once and I had to buy Disney dollars to actually buy some drinks and stuff inside the park. And I took one home. It's a great souvenir. And this is what I'm Libra lacks that, or Novi, it lacks the souvenir vibe. I want to bring it home and put it on the wall like I did with my Disney dollar, something like that. It needs something like that.
Okay, the panel is not too keen on Libra here, but they're not worried about it either. Like, some of the FUD, once Libra gets rolling again, we'll get some of those Libra FUDsters saying that it's going to destroy Bitcoin. I know that's a serious FUD that's out there. It's such a huge corporation, they can destroy Bitcoin. It's centralized. Okay, we'll see. But so prepare yourself, strong-handed people. You'll get some Libra FUD soon enough. Pound that like button. But I think it'll get people into Bitcoin. So I know Bitcoin is the next Bitcoin, and not Libra. So speaking about altcoins, BTC Benny, how many comps.com, that website?
Yes.
You tweeted out about that. I think people should be familiar with it that watch this show. I've mentioned it before, but it's becoming more obvious that Bitcoin is the real Bitcoin. Explain that site.
Yeah. So I tweeted out the other day about one of the major use cases of Bitcoin, and kind of why it was created, was the immutability and the finality of your transaction in the digital realm, and being sure that, the main issue why we couldn't have digital cash originally without a trusted third party, was that you had no way of knowing that your money was not being double spent. You also, like, how sure are you that your transaction won't be reversed? That's a big issue. And with Bitcoin, you get transaction immutability, and you get that finality of your transaction far quicker than any other digital exchange of value. Things like PayPal, your bank account, accepting e-transfers and whatever other, depending on where you are in the world, but all those bank transfers are relatively reversible. Your credit card transactions are pretty reversible. As a merchant, that's scary. If you're accepting payment online, a lot of the time you're on the hook for things like that, and you can get scammed pretty easily. And so you've got to do like extensive KYC. And again, why we didn't have digital cash in the first place is a risk to merchants as well. With Bitcoin, the finality that you get with a transaction after 6 confirmations is just orders of magnitude more than any other digital source. And so this website, howmanyconfs.com, it maps out all of the other proof of work coins, because proof of stake just doesn't apply here because you can attack that infinite times at zero cost. Regardless, all of the proof of work coins are put in order, and they have Bitcoin at the top saying, okay, 6 confirmations, how long does that take? And then for the same amount of security and transaction finality, how many confirmations would it take on all of the other proof of work coins? Ethereum is the second place, and it's twice as long. But as we've seen in the past, that doesn't matter whatsoever because they forked the whole project anyways and moved to a new project after the DAO hack anyways. So really it's like it's a group of people that actually run the software and confirm everything and dictate what the protocol is, and everybody else just kind of follows suit and goes with them. The next closest one, and I'm not looking at it right now, but the next closest one was Bitcoin Cash, and it's 33 times slower to get the same level of transaction finality. And not only that, but like it would be so easy to 51% attack Bitcoin Cash. It's literally like the only reason it hasn't happened yet is because the miners aren't bored enough and they want their Bitcoin that they're mining. And they've added checkpoints as well, which beckons to its centralization. But how many comps.com really puts into perspective the absolute surety that your transaction has gone through and cannot be reversed is just so much greater with Bitcoin than with anything else. It truly is the most secure settlement system on the planet.
All right, Boris, I don't know if you have anything to add to that, do you?
Yeah, I think this is so important, especially people who are new to Bitcoin. They don't understand the concept that a transaction can be reversed because it doesn't happen a lot. So people are used to sending, I don't know, bank payments from one bank account to another, and it's just there, the money's there, and it's instant. And they don't realize that it's reversible. And when they see, I don't know, Bitcoin in action versus different altcoins, you might be tempted to draw the conclusion that these altcoins are pretty fast. The transactions just aren't that final. And that's something that people, that's sort of concept that people have to grasp, and it takes a while. And that's one of my large frustrations with explaining Bitcoin again and again and again, is that you have to sort of like understand what people understand. People don't know what they don't know. So websites like these are really important to grasp a simple concept, which actually has a lot of consequences if you think about it.
All right, now that I got you here, I want you to give us your insider information on the Netherlands, if there's any news out of the AML situation that you've been covering.
Yeah, actually, that law, that AMLD 5 is what it's called in the Netherlands, the anti-money laundering directive, the 5th anti-money laundering directive, has gone into effect. We've seen quite a few Bitcoin companies from the Netherlands either just stop or move to other. We've seen Deribit, which is next to BitMEX, one of the largest trading platforms, moved to Panama, I think. Lots of small companies just quit. We've also seen some altcoin projects that quit. I mean, maybe that's a good thing. I don't know. But yeah, all in all, it's really bad. The only thing that's left is that people in the Netherlands have an option to complain to the European court about the infringement, the privacy infringement that's happening with this AMLD 5 directive, and that's the only option that's left. And then the privacy court in Brussels will look at it and hopefully tell the Dutch government that they're going way too far with their KYC requirements. But to be honest, I won't keep my hopes up. This battle has been fought, and KYC is a thing. It's here in the Netherlands. It's virtually impossible to buy Bitcoin or actually to sell Bitcoin without doing extensive KYC, and it's pretty bad.
Oh, have you tried BISC?
Yeah, obviously that's possible, and it's up to a certain point. It's decentralized, and there are some companies outside of the Netherlands that still offer KYC, no KYC Bitcoin. It's hard to find them, and eventually they will crack down on those services as well. I mean, the holes in the law, the gaps in the law, they become smaller and smaller.
The Netherlands. Well, let's contrast this with something that BTC Benny put out there. 70,000 Bitcoin coinjoined? What's up with that, BTC Benny?
Yeah, that's just the month of May. And that was so far just like a couple days ago. So this was a study done. It was Max Hillebrand that put it out, or was sharing it on Twitter. But it was an aggregate between Wasabi Wallet, Samurai Wallet, and Join Market. And it showed, yes, 70,000 Bitcoin made private via CoinJoin. This is kind of a guesstimate because with Join Market, it's very difficult to kind of track, but he's pretty confident that the numbers with Wasabi and Samurai are pretty accurate. And across the board, it's going up. And so the other interesting thing about it is there's a significant spike in new coins being CoinJoined, which would either indicate people that are obtaining more Bitcoin and then coin joining it, or new people are starting to coin join. My guess is it's a combination of the two, because these technologies are getting easier to use, with Samurai Wallet going mobile, somebody working on a mobile version of Wasabi as an open source project. It's becoming easier for regular people to download a wallet and just hit a button and have their coins mixed for them, so that they can then separate the links between them and their Bitcoin. I think it's an all-around positive thing. And the important thing is that if a significant number of people do this, it doesn't even have to be significant, but say 5-10% of people start doing stuff like this, it makes it incredibly difficult for any company to say, we won't accept coin joins. We refuse to accept, because then you just taint the entire pool of coins, and every coin is tainted, which I think is the goal, where you put people like Chainalysis out of business.
Yes, that has definitely been encouraged out there. Taint them all, baby. Put those dudes out of business. Now, I've got another question for you. In one of your tweets, you said, announcing a BTCPay Server grant number 7 from OKCoin. OKCoin is matching our biggest supporter to date, and will be donating a total of $100,000 US dollars over the next 12 months. Yeah, we've discussed BTCPay Server previously. You had some things to say about them. We were talking about it before the show.
Yeah. I mean, I think it's awesome that this open source project that was literally put together to spite BitPay because of their dishonest actions and the whole Segwit 2x debacle and their misrepresentation of how Bitcoin functions. Nicolas Dorier just took this as a cause of his own to build a BTCPay server and create this incredible resource for people and merchants to be able to accept Bitcoin and create shops and become a digital merchant accepting Bitcoin through, whether it be on-chain or Lightning now, and actually now Liquid as well. But you're now able to accept Bitcoin without the need for a trusted third party to do that for you, which is incredible. And to see people rallying around the developers working on this software is equally amazing. Like, to see who is it that just donated? Did you say?
I just erased the whole thing. What was it?
OKCoin.
Okay,
Yeah. So like they donated. Where I work donated. They sponsored Cux for 80 grand. So I work at Bitsy, and they did the last grant to BTCPay Server. But again, it's just awesome to see people congregating behind people that are building incredibly useful things for the community. And on the same vein of privacy, BTCPay Server implemented pay to endpoint, P2EP, so that people can now, in purchasing anything on a BTCPay Server merchant, they create a type of coin join that is indecipherable from a regular Bitcoin transaction, so that the merchant actually contributes Bitcoin to the transaction, and nowhere in there from the resulting UTXOs is the actual amount of Bitcoin transacted, which is amazing. And it breaks all the heuristics that people like Chainalysis are relying on. So it's just like, it just, all this stuff stacks on top of each other, and it's just flipping the bird to the establishment the whole way through.
I'm glad. More anti-chain analysis stuff there. Very good. Boris, I don't know if you have any thoughts on any of that.
Yeah, I think it's really important that people support Bitcoin development. And I mean, there's a couple of projects, and BTCPay Server is absolutely one of them. That really, I mean, if you see what it is, you love it. You gotta love it, and it works brilliantly, and it's so simple and so good. Yeah, I hope that the team who's working on BTCPay Server actually gets paid a lot. I've donated myself through their website, and I think all users should think about this. I mean, Bitcoin needs their heroes, and they also need some financial success for the creators, so it motivates people to get into the space and actually start contributing to Bitcoin.
All right, we got one more topic here before everybody talks about their own personal stories. High fees, crowded mempool. We were hearing about it at the beginning of the week. I think by the end of the week, the story had changed a little bit. The fees weren't as high. But here's something that came out. We just published the most extensive Segwit batching analysis ever done, going back to January 2012 until March 2020. Bitcoin users could have saved over $500 million US in transactional fees with a full Segwit and batching implementation. Whoa. So yeah, Segwit could have saved some people some money along the way here. We just got through a period of a crowded mempool. Hopefully people will be, I don't know why people don't use Segwit addresses now, but hey, maybe they're going to learn the lesson the hard way. And we're going to have Lightning soon. More people using Lightning soon. BTC Benny, what are your thoughts on the high fees that we had, or on what I just shared about Segwit? Any thoughts?
Yeah, I think it further reiterates that block space is scarce digital real estate. And in order to get a piece of that real estate, you do indeed have to pay a price for it. This is going to be a trend. It will continue because transaction fees are integral to the continued security of the network. As the block subsidy gets diminished every 4 years, something's going to need to supplement that over time. And we're going to start to see more and more that the fees will peak up and above that of the block subsidy in terms of revenue for miners. We saw a little bit of it during the last mania. There were a few times where the block reward was less than the actual fees paid. A lot of that was just inefficiencies. But in order to get to that point, we need for that fee market to be fully fleshed out and fully realized, people need to be using it as efficiently as possible. It'll naturally happen over time, but if you don't prepare yourself in advance, you're going to find situations where you're paying way more than you should. So I highly encourage people to, number one, get a wallet that supports full BEC32 addresses, which means if your Bitcoin address that you see on your wallet starts with a 1 or a 3, not quite good enough. You're going to want to get one that starts with a BC1. There may be the odd compatibility issue, but by and large, probably not. And there are ways to get a 3 address so that it's compatible. Regardless, get a BEC32 wallet, and then learn about, if you're regularly making payments, learn about batching your transactions. Because if you do let's say I have to pay 10 people, if I do an individual transaction every single one of those people, even if I'm using a BEC32 enabled wallet, that's going to be far more expensive to do that way than to say I've got this amount of Bitcoin here and I'm going to send it in a single transaction out to all these 10 people. The efficiency that you gain from doing that and the amount of data that has to be added to the Bitcoin blockchain is far less. And I think exchanges need to ensure that they're doing this. The other thing about it, as far as transaction fees to cut down on that, is how exchanges are utilizing the blockchain, or if they're even on the blockchain. Things like Liquid were specifically built for a lot of inter-exchange transfer. Now, I know Liquid is not Bitcoin, it is a peg, but if you're somebody that is a trader, which again, I'm not a big trader, but if you're parking your Bitcoin on an exchange, you're trusting that single entity to hold your Bitcoin. If you're utilizing Liquid, then at least it's it mitigates the risk a little bit. It trust minimizes it to the point where it's a federation with the pegged Bitcoin as opposed to just a single entity holding it. And it moves all of those transactions off chain. The settlement time is 2 minutes. And you also have the benefit of lower fees, and you have the benefit of confidential transactions. So if you're moving millions of dollars inter-exchange, you don't see traders that see publicly on the blockchain what you're doing and front run your trades. So again, I'm not advocating that you go out and gamble, but at the same time, if this is another efficiency that exchanges can utilize so that scarce Bitcoin block space is best utilized, and we see that fee market fleshed out, and it can, while still being somewhat relatively reasonably priced, can also subsidize the miners at the same time.
All right, Boris, fees.
Yeah, I have the feeling that most of these high fees are coming from exchanges. I know that a lot of exchanges don't want to see their service desks flooded with people asking questions where their transactions are staying. So what I'm seeing is that most of them just add a fixed fee like 50,000 sats on top of the transaction fee, and just to make sure that the transaction is in the next block, so people basically don't have to wait. It's absolutely ridiculous. People should be able to choose their own speed at which they receive the transaction, choose their own fee. Yeah, I mean, most transactions are from exchanges are highly overpaid, and there's really nothing you can do, especially in this completely KYC country where I live, where everything that you buy on an exchange needs this 50,000 sats transaction fee. It's horrible, but it's the reality.
I feel like exchanges should be like every withdrawal should be a low fee RBF transaction replaced by fee, right?
Yes.
Or at least give that option, right? And so if you have that slider of, hey, how quick do you want to receive your payout? This is what it's going to cost you. You could set it super low. If it's taking too long, then go back in and hit bump fee. There you go. Then it doesn't by default bump up the fees for everybody else. Like exchanges are really going to have to think about this, because it's not sustainable the way they're doing it, and the market will force them to change.
Absolutely.
All right, dudes, we're at the end of the show here, so it's time for the guys to talk about what they're doing, or to say, tell a story that got left out, share some news. We'll start with you, Boris.
Yeah, I got two things. First of all, I want to shill for all the European watchers, the European version of Lolly. We finally have a satsback service here in the Netherlands. It's still, or not in the Netherlands, it's in Europe, it's Europe-wide. It's still in beta, but it's called stacking.com, and stacking is spelled STEKKING. .com, and it allows you to get sats back from everything from AliExpress to most major European shops, and I love it. It's absolutely fantastic. I mean, I've seen all the Americans like bragging about, but they have law. It's absolutely fantastic. So, and another thing, Adam, I wanted to ask you, when I started watching your show, and I guess like 5 years ago, you always line like on hand 2020 vision, because the 2020 halving was something that was like the end goal or something. And I always knew, like, we're going to get there one day, and I'm going to talk to you, and I just wonder what you're going to do. Are we 2024 with vision now? I mean, is this where we sell? How have you changed?
No. I always said the earliest I would possibly sell a Bitcoin for fiat for dollars would be after the 2020 halving. But so we're after? No, I'm not selling anything. I can live off of I've got it set up. I can make it to 2024 easily. What I was trying to do back in 2016 was teach people about long-term thinking. They were thinking about the next day. And the easiest date to point to was 2020, the halving. It taught them about the halving also. So it was a darn good day to state, to put out there back when Bitcoin was $400. And I'm like, dudes, it's $400. Don't sell at least until after the 2020 halving. Well, if some people really planned it out that way and then sold all their Bitcoin, they probably did darn well. But I hope they didn't sell their Bitcoin because, dude, 2024, strong hand, people. 2024, strong hand. But hey, so now all the newbies, I'm teaching them about 2024 because you got to have you cannot think about tomorrow. Think about 4 years from now, because if you think about tomorrow, you're going to make a mistake. And I learned from this chart that it's going to go up $10, so I better sell it and I'll buy it. Yeah, it's nonsense. All right, BTC Benny, your conclusionary thoughts.
Yeah, to tag on to what you're saying, measure not just your investments, but also your achievements in Bitcoin epochs, I think is the way to go for your cycles. There we go. That's what we need to focus on. But besides that, I wanted to give a shout out to everybody that I've seen on my Twitter feed is tweeting me pictures of nodes that they've set up because of a tutorial I made a few months back. And I love it. And it's just, it's probably one of the most rewarding things that I have experienced since getting into Bitcoin is seeing just this flood of people that have claimed their monetary sovereignty by setting up their own Bitcoin node. And I'm blown away by it because there's been so many of them. And I you can't see it, but I've got my node running behind me. I set it up using my node, which is like the open source software that you can get run on a Raspberry Pi. But it's just so cool to see people that previously thought it was difficult to run their own node and self-verify and take a bigger step into participating in the Bitcoin protocol, make that leap and realize it's not as difficult as they saw. And so not everybody has to run a node, but the more people that do, the more robust things get and the less likely to coercion everybody is. So again, to anybody that has said, hey, I used your tutorial to set up a node and sent me a picture of it, thank you. I love seeing it every day and it brings a smile to my face. And keep on claiming that monetary sovereignty for yourself.
Both of these dudes, Boris and Benny, are linked to below. Follow them on Twitter. Seriously, you'll get to see pictures of nodes. Value your time in halvings. That's another one of my sayings there. You're talking about people are going to measure time that way. Of course, value your time that way. That's it, dudes. Shabbat shalom, everybody. I hope everybody has a great weekend. Lots of traveling for me soon, and you'll see me in new locations. Oh, yeah. Get a move on. In motion. These dudes are in motion. I'll be in physical motion still. I'm Adam Meister, the BitcoinMeister, Disrupt Meister. Subscribe to this backup channel. Follow me on Twitter at TechBalt. And new show here every day, of course, Conviction. See you guys tomorrow. Thanks a lot again, everyone. Bye-bye.